you're going to lose 90% of your money over the next 24 months. There is a risk to doing nothing. One regulator could get up tomorrow and put out a press release that would double the market. Well, if Apple stock doubles, we should just sell it and rebalance, and we'll buy a bunch of other computer companies so you don't have too much risk. Well, if Amazon stock doubles, we should just sell it and buy some other retailers, Toys R Us, whatever, something, not too much risk. My view at that time, and it's still my view today, is like the problem with diversification is selling the winner to buy the losers. One company in the retail space, Amazon, wins. The second company, Walmart, kind of treads water, and 15,000 companies lose. They all lose.
Is your strategy you just don't give a shit? You're buying no matter what, like periodically?
Let's just deal with the elephant in the room here, which is if you look at Bitcoin and you look at all the other cryptos, there's a crypto economy. It's got its own future. It's very complicated and murky. We could talk about it for 3 hours. There's competitive issues, security issues, regulatory issues, nation state issues, complicated. Then there's Bitcoin, a digital property on a dominant network. It doesn't need any of the other crypto whatever to be successful. For Bitcoin to be successful, there are any of 10,000 entities. The Sovereign Wealth Fund of Abu Dhabi, the Sovereign Wealth Fund of Saudi Arabia, the Qataris, the Emiratis, the Norwegian Sovereign Wealth Fund, every public investor, every macro investor, every large company on earth, any municipality, any state, any government, there's 10, 20,000 people. They go to sleep tonight. They could wake up tomorrow morning and they could say, I think Bitcoin looks like crypto gold. I'm going to go ahead and put 3% of my portfolio in it. That means I'm going to buy $4 billion of it. I'm going to buy $4 or $5 billion of it. It's nothing to me. It's nothing. It's like figure out how important 2% of your money is. It's like that deal. It's like, I noticed it. I'm going to put 2-3% of my assets into it. We'll see where it goes. LFG. And they put the news release out on the wire, and Bitcoin doubles or triples. And then, if the Sovereign Wealth Fund of some Middle Eastern state did it, if they bought $5 billion, these people have $500 billion. Like the intelligent sovereign wealth funds, they're not, the central banks of smart countries, they're not sitting on a bunch of long-dated T-bills. They're not holding a bunch of sovereign debt. They're holding Apple, Amazon, Facebook, Google. It's like, it's the day that a Warren Buffett gets up and he says to some dude that works for him, I got 50 billion, figure out something to invest it in. And the dude says, we bought $10 billion worth of Apple. And then Apple triples. And Warren Buffett made more money on Apple stock, which was a delegated decision by a dude. He made more money on Apple stock than he made in his entire life. And he's acknowledged to be like maybe one of the most successful investors of the last 100 years. And yet the thing he made the most money on was like an afterthought. So back to what does this mean to Bitcoin? It's like some dude with a $400 billion balance sheet can delegate to a portfolio manager to look at this thing. And that portfolio manager can say, I'm going to put 2% into it. And if you pick up the paper and you read that the Sovereign Wealth Fund of such and such state bought $5 billion worth of it, what happens is the next 5 countries, they think they'll put $5 billion into it. And then what happens next is somebody at Google will say, I guess we can hold $5 billion of it. And then somebody at Goldman Sachs or Morgan Stanley will say, I guess we probably should grab some. And then Ray Dalio with his $50 billion or $100 billion or $150 billion, instead of like 0.5%, maybe 3%. Okay. And then all of a sudden Bitcoin spends from 40,000 to 150,000, 200,000. And I guess what I'm telling you is there's 10,000 people that could make $5 billion in 30 days if they wanted to bend over and pick up the money without taking a risk. But at the end of the day, the future is going to be determined in part by the past. And in part of it is what the crypto industry thinks and does. But a lot of it is a function of what one regulator could get up tomorrow and put out a press release that would double the market. Any politician, there's probably 200 politicians. There's 10,000 big companies. There's 10,000 big institutional investors. There's 10,000 big governmental entities. Here's the big idea. The things at a tipping point, you don't need them all to agree. You just need anybody to agree. All you need is 1, 2, 3. One will tip 5, will tip 25, and then you spin up by an order of magnitude. So when will that happen? I don't know. Like, is it an if? It's not an if, it's a when. It will happen because I can't really imagine that we live in a world where 30,000 people don't want billions of dollars of money. Like sometimes I'll talk to these big investors and they'll say, well, what's this thing with Bitcoin? I say, well, it's digital property. It's the dominant global digital asset network, and it's a lever. And here's the reason it's better than credit or bonds or real estate. Here's how it fits in your portfolio. I got to think about it some more. And I try to always be very polite, but in the back of my head, like I'm like, you have $25 billion in your portfolio and you generated 2% yield last year, which is downright embarrassing because the S&P was up 25% and a freaking robot could have got 10x what you got. And I'm thinking, you must not like money that much. Like I'm listening to you, I'm telling you, take $1 billion, take $2 billion, buy Bitcoin, put out a press release, explain why you bought it, and wait, and you're going to double your money. You must not like money, right? Like, because it would take you, I don't know, not that long. It's not easy to make billions of dollars. It's not easy, but there is one easy way, Bitcoin. The distinction that I make, I think it's helpful, is you've got a portfolio. Let's say you have $100. What portion of it is a savings account that you want to save for 100 years? 10 years at least, a long time. That portion you want to save in strong property. In an inflationary environment, if you're going to save money for 30 years, you either got to buy land or some strong property, and Bitcoin I think is the strongest property. And you decide what. I mean, I respect any decision. You want to buy art, you want to buy land, you want to buy trophy assets, you want to buy something that'll hold its value for 30 or 40 years. You do that, you're a saver. It becomes pretty obvious if you live in Argentina and I told you the currency is going to lose 75% of its value in the next 12 months. If you're switching from the peso to the dollar, you're just a saver, right? You're not an investor. It looks like an investor or speculator, but you're not. You're just converting from weak to strong asset. There's another part of your portfolio. You're an investor. Okay, you're taking risk. Like, is Apple better than Peloton? Is it better than GameStop? Is it better than ETH? Is it better than Solana? Is it better than Uber? And I only choose to articulate and advocate and educate on Bitcoin because I believe it is what I'll call ethical safe haven for a public figure. I don't even endorse my own stock, you see. I'm not going to endorse Apple. I'm not going to endorse Google. I'm not going to give investment advice. I mean, the definition of investment advice is if you're investing in a security. If you're investing in property, I'm giving you lifestyle advice. My lifestyle advice is trade your weak currencies for strong currencies. Get a place to live. If you have excess funds, it's good to have a home that you can live in the rest of your life. That's lifestyle advice. Control your destiny, right? And I would say macroeconomic political advice is, all things considered, if you can own a piece of property that doesn't get taxed 2% a year, like if you buy land in Florida or a house in Florida, you do get charged 2% a year. That means over 100 years, you're going to pay 200%. You're going to pay more. You're going to pay 500% over 100 years because they're going to appraise the value of the property up and charge you 2% of the appraised value. So I just give common sense advice, which is, if you know you're going to have the property stripped out of your hands in 10 years because of inflation and taxation, that's not a good saving strategy. Find something you can hold for 30 years and maybe give to your children. And if you don't have children you want to give it to, something you can hold to live on. And if you don't need that, something you can give to your favorite charity, right? I'm not here to give you trading advice. I can't time the market. I don't understand all those risks. I know there's a risk an asteroid will hit the Earth. There's a black swan risk, and maybe demons come down from hell above or heaven below or whatever, and they screw with Bitcoin. I get it. But all things considered, you're going to lose 90% of, your money over the next 24 months if you're in a hyperinflating environment by doing nothing. So my view is, if you're guaranteed to lose 90% of your assets to do nothing, you might as well do something. It's like I said to people on Bitcoin, it's like, you don't like Bitcoin? You think it's 95% likely to fail? Okay, then only allocate 5% of your money. If you think it's 99% likely to fail, then you might as well put 1% of your money in it, right? So I think that people oftentimes, they don't get their risk right. There is a risk to doing nothing. And the risk to doing nothing in a monetary sense is the monetary inflation rate. So when the monetary inflation rate hits 25%, it means that there needs to be a 25% chance of Bitcoin going to zero in the next 12 months for you not to want to buy it. And when the monetary inflation rate hits in Lebanon or Turkey or Argentina or someplace, when it hits 50 or 75 or 80 or 150%, the risk of doing nothing is far higher than the risk of doing something.